Making money with cryptocurrencies may appear more doable than many people think. Let's take a closer look at this. We're going to get into a subject that many of you are passionate about in today's episode. Making money with cryptocurrencies, regardless of whether you're more interested in the idea of decentralization than I am or whether cash is your main concern. One thing that all people have in common is that nobody likes to lose money. Everyone wants to make oftish returns on their investments. Investing their time and energy in their hobbies or passions can yield a shockingly simple way to make money in the cryptocurrency space. This tactic has worked well for both traditional financial markets and digital currencies. I'll provide you with a sneaky way to increase the value of your cryptocurrency assets. We're discussing the dollar cost averaging (DCA) strategy, which we'll go into more detail about today. By the end of this video, I'll share with you a particular insight and a crucial lesson that I won't give away. So pay attention and try to catch it. Determine the fundamental lesson. Visualize in the broad world of cryptocurrencies. XRP is a jewel if you happened upon it back in 2013, which was a chance that many people passed on. Even if I'm actively working in the cryptocurrency field, let's say that you confiscated Bitcoin or XRP at that time. Taking into account that I own Bitcoin myself, such chances were real in 2012, even though many of you are probably thinking, if only I had known this back then. The discussion will focus on how to use these tactics in the present. I need your quick favor before we go into today's fantastic updates. To inquire about your enjoyment of our content, provide us with your support, hit the like button, subscribe to our channel, and ring the bell to join our wonderful community. If you had chosen to put $100 each week, also referred to as and boned by some, into XRP from 2013 onward, your total investment would have been around $544,000. Now estimate that figure. Investing you did here today. Yes, an astounding $11.44 million. Amazing. Isn't that your talent? It's impressive to see the numbers rise from $54,000 to $1.44 million. Is an incredible idea, but let's temper our enthusiasm with a little. Had you actually decided to liquidate? Your $27,000 investment in 2018 could have grown to an astounding $5.3 million. On the other hand, if you had invested around $227,000 at the peak, your returns today would have been negligible, to put it mildly. Highlights. Even after 12 years in the cryptocurrency space, I must agree that timing your exit strategy is difficult because of the volatility of cryptocurrency investing. Although the dollar cost averaging method has proven to be a successful means of generating wealth, it is not without danger. Notably, if you have invested. What's the lesson learned since the peak? Here, securing revenues is essential. Along the road, refrain from becoming unduly greedy. The adage "don't chase a gift horse in the mouth" is aptly applicable in this situation. Keeping your investments in your hands may not always be the wisest course of action. The idea of diamond hands supporting steadfast investment holdings frequently has poor conception. In reality, what we're promoting is the notion of powerful hands. The ability to endure market downturns without panicking and selling at the wrong times. This is an important strategy for investors, not traders, who need to understand that it's not always a good idea to hang on for the long haul. Even though XRP is regarded as the standard in the world of digital currencies due to its use in banking and international settlement, the general public is unlikely to use it as their primary form of currency, so knowing when to sell your position is crucial. You can do this by dividing the dollar cost averaging into XRP. In 2013, it had the potential to grow a $100 monthly investment into $1.44 million, but the true test and lesson here is the skill of discovery. Such chances early on, which necessitates thorough investigation and a proactive approach. The market is still risky and unclear. Factors that have a big impact on everyone's investment decisions, from big institutional players to ordinary retail investors. Chairman Powell's remarks at the recent Federal Reserve meeting, particularly the decision to not raise interest rates despite expectations in this environment, have only added to the uncertainties surrounding the potential risks associated with investing in cryptocurrencies and stocks. This underscores the significance of being well-informed and strategic when navigating the unpredictable world of investments. The recent decision by the Federal Reserve to maintain the current interest rate came as no surprise, but it left many waiting for Chairman Powell to provide some insight into the outlook for 2024. Specifically, there was hope that Powell would provide some indications regarding whether interest rate reductions, which would essentially ease the financial constraints currently in place, would be forthcoming. However, Powell's remarks notably lacked clear guidance on future rate cuts, injecting a heightened level of risk and uncertainty into the financial landscape as we look toward 2024. This lack of clarity has metaphorically muddied the waters for investors and analysts trying to navigate the upcoming year without signaling an immediate financial crisis. The decision represents another obstacle in the ongoing. It is apparent that market participants are navigating a complex situation as they attempt to interpret the Federal Reserve stance, feeling as though they are on the receiving end of a barrage of blows in this metaphorical fight due to the referee's lack of clear signals. This situation highlights the tricky balancing act by striking a balance between the need to create a favorable economic climate and the fight against inflation. The Federal Reserve's cautious approach must be understood by emphasizing the complex interactions between decisions about monetary policy and their wider economic consequences. They are obviously not giving away all of their plan's details, and they are closely monitoring several economic metrics, such as inflation rates, GDP reports, and more to manage the changing economic environment. But for us retail cryptocurrency investors, the risk and uncertainty that currently exist deter a wide range of investors, from small investors like ourselves to major financial institutions, from actively investing in this sphere. Causes a sizable amount of money to stay uninvested. We should exercise caution due to the significant perceived risk and ambiguity associated with investing in cryptocurrencies like Bitcoin, Ethereum, Cardano, or any other digital asset judged too high. Today's developments have made this already widespread risk even more hazy, further complicating our decision-making. These circumstances extend the cryptocurrency market's present stagnant phase, in which there hasn't been any development or change. The Federal Reserve meeting in March and the anticipated Bitcoin event in April are currently the focus of the cryptocurrency community's attention, as they both have the potential to impact the market's direction in the current environment of greater ambiguity due to risk. And although uncertainty acts as a reminder of the erratic and unstable character of the cryptocurrency market, these difficulties also offer educational opportunities and adjustments as we proceed, waiting patiently for more certain indications and developments that could define the course of the cryptocurrency industry. Please keep in mind that I am not a qualified financial advisor and that the information in these videos is only meant to be entertaining. I always suggest viewers do their own research and speak with experts before making any financial choices. I appreciate you watching, and if you liked the video, please click the like button. Remember to enable alerts to be the first to know when I upload new content. I'm looking forward to seeing you in the next video. Take care.